Hey everybody, welcome to the morning market briefing. It is Monday, August 17th. It took me a minute. August 17th, 2026. Hope you're doing well out there. Ben, Tom, how was the weekend?
It's good.
Good. Tom,
Yes.
surviving? Yeah, cool. Good stuff. Let's jump in. We've got lots to get to. We're going to talk a little bit about the most highly valued company in China, some Goldman commentary, but let's start with Anthropic. Getting some leaked Q2 results. Revenue of $11.5 billion, up 1,300% year over year. Ben,
Looks like they're trying to become the most highly valued IPO in history with some of these results. So in Q2, $11.5 billion in revenue, as you mentioned, and pretty much implying that they did 5 or 6 in the month of June, and that continues to go up. The growth rates are pretty staggering, up 14 times, 1,300%, compared to $787 million a year ago. And then even up 143% quarter over quarter. So Q2 compared to Q1 up 2.4x. What's probably most impressive, though, is that the company is profitable. It's adjusted operating profit, which if they're talking about adjusted operating profit, it suggests to me that operating profit is not, like GAAP operating profit is not in the black.
but also not necessarily all that uncommon to see something adjusted.
No, because it includes stock-based compensation. Yep. That's probably the biggest piece of that. But for context, SpaceX's AI business posted an adjusted operating loss of $760 million in Q2. So you put that together, and Anthropic's really leading the charge, but probably even beyond the revenue growth, which is impressive, is the profitability. And we kind of alluded to this last week. I think on Thursday we were suggesting that this could be the case, and it certainly seems that way. Now there's a lot of assumption that goes into that, including depreciation of these GPU chips, but I think that will be supportive of the AI industrial complex, or whatever we're calling it, and as we proceed from here. So I think that they'll IPO it toward the end of Q3, beginning of Q4, and I think that there's going to be a lot of money sloshing around, which will be very interesting to see where that goes. Will that, it's also coming at the end of the year. Charitable donations come around, kind of cluster around that time of the year. So it could have some really interesting knock-on effects, given the timing. Not, even beyond just the sucking sound of air coming out of the balloon of other stocks and into Anthropic.
How would you kind of contextualize their spot in this AI space? In terms of, are they the gorilla?
They're the most expensive. And I think that they probably have the best model in Claude Fable, but it is by far the most expensive model. I was looking at a lot of statistics, which are now publicly available and free. We're going to try to put some of those together. Bank of America just did so. And they definitely have kind of the suite of top models, but ChatGPT is right there. OpenAI has increased its performance significantly and is a lot more cost effective because they just cut prices. So I'm curious to see how that value equation works out as we go forward. But we are also starting to see the amount of time spent on AI, other frontier models other than Anthropic, OpenAI, DeepSeek, Gemini, other than the big guys. We're seeing to see those ones start to shrink.
It's going to be interesting to me, Tom, to just see how these folks reposition themselves as leaders emerge in different aspects of the business. Presumably you're going to see people say, okay, well, let's be the value play. Hey, let's be the highest end. Let's be specialist in this or that or the other. I think that's going to be a story that we're not. I don't even think we're in the first inning of.
Yeah, we kind of already saw it with Grok, or I guess XAI is pushing towards being the engineering, GPT.
Yeah.
Basically putting themselves in a position where they're going to get the best engineering knowledge that they already have on hand from SpaceX and Tesla, and basically distilling that down into a way to supercharge engineering and build newer and better, cooler stuff.
The Bezos-Musk feud, and I don't even know if it's a feud, but I feel like they're both doing the exact same thing in parallel and there's no like crossover in terms of Bezos actively saying he's competing. There's a little bit with this Blue Origin, but I think that's mainly fabricated by the media. But in terms of going to space, Bezos actually has a $40 billion startup that is doing an engineering AI, and now Musk is going after that with Grok. It's really interesting. They're doing a lot of the very same things.
Little, I know that you know that I know what you're doing.
Yeah,
Yep.
but
But nobody else really cares.
one
Nobody's
has a
talking about.
much larger stack of chips.
Yep.
Yeah.
I mean, by orders of magnitude and levels we've never seen before. More wealth by a wider margin than anyone's ever been more wealthy.
Well, Bezos also got cut in half.
Yeah.
Tough times.
Rule number one of economics.
Yep.
If you get married, stay married.
CXMT, which is, how do you say it? Shangzhen memory. Do you know?
I don't know.
Oh, you don't
I'm pleading.
Oh,
the fifth
come on,
that.
Ben.
I'm
Come
pleading.
on.
Wow,
Leave me
dude.
high and dry.
Wow, dude.
To
I was
quote
ex-
Aaron Rodgers, I'm using the rights under the Fifth Amendment.
Now the most valuable Chinese company surpassed Tencent with a market cap over 500 bill.
Yeah,
Memory's hot.
it really is. What's interesting is you think about the other big Chinese companies, and you think Alibaba. I don't think many people think of Tencent, but Tencent is a really big company. It was the parent company of TikTok globally, and now I think TikTok ex-US.
Yeah.
But I mean, if you think Baidu, Alibaba, I mean, these companies that everyone was talking about,
Pinduoduo.
from like 2012 to 2022, and then the Chinese government cracked down on all those other companies, and now it's just a memory chip company, CXMT, which is the most valuable one, and this is the one that Apple's also talked about sourcing memory chips from. It's interesting to see. I wonder if it will be maintained, but it's basically just kind of trying to lever toward whatever the Chinese government is pushing at the time. And they pushed against Alibaba and Tencent, and now they're pushing for domestic manufacturing of chips, just like we're doing in the United States. And you're seeing these rise to the top, but I don't know if that will be maintained.
Well, you've got a couple of factors at play. One, just the chip cycle in general, but also trying to please the regime in China is a fickle opportunity. It's there until it's not, and when it's not, it's really not. So
Yeah, how quickly is the guy who runs? How quickly is he going to end up in a re-education camp like
Jack Ma.
like Jack Ma did?
Yeah.
Or just I mean, you forget like Alibaba routinely has just been dinged for, we're taking 5 billion shares of stock. It's just ours now. It's pretty it's dicey over there.
You didn't build that.
Yeah.
We often wonder, Tom, who listens to our call beyond the super users that are brave enough and bold enough to come forward. It seems like maybe Goldman's listening.
Yeah, so it looks like they're turning towards the dark side. They're joining the boys in saying that the bond market is too hawkish right now. The people who are getting stuck in sort of a cycle where everyone's like, rates are going up, inflation's going up, rates going up. Well, they basically said, quote, after 2 months of materially softer jobs, innovation and inflation data, it's hard to see any of the doves shifting towards hikes. I mean, I tend to agree. We've talked about it a ton on the call, a ton internally. Things are just continuing to spiral towards higher rates for the sake of people saying that that's what is going to happen. And what's really interesting is that we now have a higher, like the 10-year is still net lower than it was to start last year. And the 30-year is, roughly around the high point that it's been at really through this whole cycle. And yet inflation is significantly lower. And not only that, but it's lower now than it was when they cut rates because they wanted to save the jobs market, which they also said was very strong at the time too. And so I just don't see a scenario where we're not going to suddenly just get all the air sucked out of the room. I mean, it's kind of like when, it was a foregone conclusion that Hillary Clinton was going to win in 2016. Everyone's just like, oh, this is stupid. Why even go vote? Because it's obvious she's going to run away with it. You look at
Pokemon go to the polls.
Yeah, and you looked at the what's the stupid Nate Silver?
538.
538, and they're like, oh, she's got a 78% chance of winning, and then it didn't, and the markets shifted significantly. I mean, the Trump bump was a real phenomenon because suddenly everyone was like, everything we've just been saying is a foregone conclusion is suddenly not true, and everything has to change gears very quickly. And I think that's what's going to happen here is eventually there's going to be an aha moment where the market realizes we've just been whipping ourselves up into a fury about this high inflation thing, and it's just not there. I mean, the pressures just aren't there. And I was listening to a podcast over the weekend, and I would encourage everyone to listen to it. It's actually Jimmy Carr on Modern Wisdom.
Yeah, it's good.
And they were talking about UK politics because Jimmy Carr is British, and so is the host of that podcast. And he said something that I think really is a great explanation of what the America First agenda is. And we've been circling around this point and trying to nail it down. But he said that if you focus on equality, what you end up with is scarcity because you're taking from everybody and trying to, we've only got so many limited goods. We got to move it over here.
Think rent control.
Yeah. And all these different things that we're focusing on. And that's a big problem in the UK because they've got so much red tape, so many different problems that they're dealing with simultaneously. And they're focusing so much on everyone being equal that they're creating nothing. And he says, I don't care about equality. What I care about is abundance. If you can generate enough goods and services and wealth that everyone has enough that they feel satisfied, then you don't necessarily need to worry about everyone having equal because everyone has enough. And I think that's something we've really lost focus on in the last 50 years. You think of post-World War II, it was really about abundance. Everybody's suddenly home and productive and having kids and building houses. And, you could buy a house from Sears and put it together for $12,000. You got a house now. And we've gotten to this point where we've got so many different things preventing anyone from doing anything. And we're just like, well, the only solution is to run up the debt, pay people checks, give everybody as many different free government services as they can. And that's going to make everyone equal and no one's going to get left out. But what happens is everybody gets left out. And I think that's the shift we're seeing economically, where we see the manufacturing coming back, the lower end jobs being the highest income increases. We're starting to see that bottom up. It's the opposite of trickle down economics. It's really just build it from the ground floor up. And that, I don't know where I was going, but I think that brings inflation down. Abundance brings inflation down because you have more stuff, and the more stuff you have, the less it's going to cost because you've just got more supply, and it doesn't really matter what demand is.
Yeah, I just think that people are just responding in terms of the inflation to where interest rates are, and I think that they're saying they're justifying their inflation views based on where interest rates are, and they're not seeing what you're saying in terms of the supply side, the abundance, the bringing back the means of production, the growth in lower skilled workers' wages, which is what you're talking about. And I think it's a good lesson. And it's a really good reason for Kevin Warsh to say, let's focus on the big problems, these big task forces, because that's going to get monetary policy right. We're not trying to necessarily win each game. Well, we want to win each game, but we're not. Each game could go a different way. Like if you become myopic on predicting the next inflation print or making a 25 basis point move, you're going to miss the bigger picture. And I think that some of these Fed people are missing the bigger picture.
I think, Ben, in your notes, you mentioned, you kind of have a situation where people are pegging inflation expectations based on where rates are, not the other way around. Kind of the tail wagging the dog illustration. And I think, not to excuse that pattern of thinking, because I think a lot of people are so clearly wrong. We've talked about it every day on this call. There is an element, though, of where you see that, because we've been in an era of, essentially, if you look at the last almost 20 years, zero interest rate policy and then insanely interventionist policy. So people have correlated and come to think these two things are the same thing. High interest rates means there's an inflation problem, because for the last 2 decades, the better part of it, that's been the case.
And it does bring up the question, okay, so it's incumbent on the people who don't think high interest rates are a result of inflation to derive why interest rates might be higher. And I think some of it's just supply. We've talked about it all the time. the amount of supply coming to the market in the equity markets through these IPOs and how that could create some gyrations in the equity markets overall as money goes into Anthropic and SpaceX from NVIDIA and Microsoft. And I think you are seeing the same thing in the bond market, except the bond issuance is even more than the stock issuance right now. And you talk about $500 billion in credit coming to the market, and probably, trillions if you add it all up in terms of the corporate issuance. Google's issuing bonds like crazy, and it's going off at good yields. And there was a Bloomberg story out on it this morning saying, look, I can get 6.5% in Google. I don't want to hold my 5% treasury. I'm just going to rotate from my 5% treasury to my 6.5% Google and clip that coupon for the next 10 years. And I think that a lot of people are doing that. And as you do that, it gradually walks up interest rates, and they're going to continue to walk up until all of a sudden inflation is too obvious that it's coming down, and then it's going to happen really quickly. I texted Tom this over the weekend. I was like, it's going to be like a thief in the night, and all of a sudden you'll be like, I'll never get those 6% bonds again.
Yep.
And what's interesting to me too is that there's so much demand for these asset-backed, these chip-backed deals that are coming through, the NVIDIA deal. It's like I could go out and I could get debt that's paying a nice income stream. Let's say it's 10% backed by these chips, which are at the highest price in history and have gone up exorbitant in the last few years. And suddenly, what if they do get the supply side right? And suddenly the asset-backed debt that I have, the assets aren't worth anything because suddenly we have an abundance of these chips because we focus so hard about standing up, these fabricators. I would much rather buy bonds that are they're backed by Rock, Flag, and Eagle. You know what I mean? Paying 5%, as opposed to being backed by some very expensive chips that weren't that expensive 6 months ago and were almost worthless 12 months ago. And so that cycle could turn really quickly. Whereas the United States is number one, still number one, and the once and future number one country in the world. But now you can get paid a lot more to hold those. I think you're living in La La Land, man. That's just me. That's just my opinion.
I'm with you, man. America's Back. We're high on the America's Back reading for Tom. We'll have to get a reading on Ben sometime, maybe later this week. Lighter week in terms of earnings report and economic data. Ben, what are you keeping an eye on?
Home Depot, I think. Walmart toward the end of the week, but certainly Home Depot earlier in the week. I was listening to the call on Friday, and you guys were talking about the retail sales, so I think Walmart will be interesting on that. But Home Depot, they've talked about the housing market being terrible. This is the biggest. Last quarter should have been the busiest housing quarter of the year.
Yep. And 6 months ago, they came out with essentially dual guidance.
Yep. And I'm curious to see what they say about that. And I don't know if it's going to be favorable, but I don't think the market's pricing it to be favorable either.
Tom, anything top of mind? Fed minutes?
No. Yeah. It's going to be an interesting week. The minutes will be interesting, but I don't think that interesting. I think there'll be a lot less of them, as we saw last time. So, we're just going to have to make our own decisions.
Yep. Oh, no. All right. We'll wrap it up there. We'll be back tomorrow. Y'all have a great day.